Welcome to The Explainer. If you look at the global economy right now, you might naturally think the most important commodities driving our future are oil or maybe gold, but you'd actually be wrong. There is one fundamental commodity dictating the future more than literally anything else right now, and that is electricity. We completely take it for granted when we flip a switch, right? But globally, electricity currently exists in this state of extreme paradox. We are simultaneously seeing unprecedented, astronomical demand in one part of the world and just catastrophic, systemic failure in another. To really wrap our heads around this power paradox, let's just consider the sheer contrast between two very different worlds today. On one side, we have the US market, which is smack in the middle of this massive artificial intelligence gold rush. Power demand there is soaring to levels we haven't seen in an entire generation, literally just to keep servers running. But on the exact opposite end of the spectrum, we have a terrifying geopolitical emergency. Libya is quite literally going dark. As we'll see, an entire economy can completely collapse in a matter of hours without stable power. So we're going to break down both of these extremes to understand the very real fragility of our modern world. Okay, let's dive into Section 1, the AI power boom and the massive supercycle. To really grasp the absolute scale of the US boom, we need to look at the numbers driving these data centers. Last year, the surge in AI and cloud computing pushed data center power demand to over 64 gigawatts. To put that into perspective, 64 gigawatts is roughly enough to power tens of millions of homes. It's massive. But notice the projection for the end of the decade. We are looking at that figure almost tripling to a staggering 192 gigawatts. I mean, this isn't just a slight uptick, right? This is a fundamental rewiring of American power consumption just to feed the insatiable appetite of artificial intelligence. And the poster child for this massive boom is absolutely Southern Company. They recently reported adjusted earnings per share hitting a very strong $1.13, beating estimates by a mile. But the really key takeaway here is exactly why they're growing so fast. They reported that their data center usage jumped nearly 50%. Because of this AI rush, Southern Company has essentially locked in 17 gigawatts of load demand all the way through the 2030s. So if you're an investor, you're looking at these guaranteed massive revenue streams. But there is a huge, kind of hidden friction behind all that explosive growth: 30 months. Now, why is that specific number so important? Well, because keeping up with this demand requires huge capital expenditure, and the supply chain is just buckling under the pressure. The lead times for crucial equipment, specifically those massive natural gas generators needed to back up these AI data centers, have literally doubled to 30 months. You can't just snap your fingers and build a power grid for AI. You actually have to wait 2.5 years just for the backup parts to arrive. Which brings us to a pretty big reality check. $69 billion. That is the amount of long-term debt Southern Company is currently carrying on its balance sheet just to keep pace with all this. While the market has been eagerly pricing in the AI boom, Wall Street analysts, like those over at Truist Securities, are actually starting to cool off a bit, and they're cutting their price targets. The consensus is still a hold, but analysts are watching these debt ratios incredibly closely. The demand is undeniably hot, for sure, but the financial risk required to physically build out this infrastructure is incredibly high. So what does this actually mean for everyday folks? Let's move to Section 2, the local grid rebellion and grassroots opt-outs. While the big utilities are busy signing contracts with billion-dollar tech giants to power AI, regular consumers are watching the grid strain, and they're worrying about massive price spikes. And they aren't just sitting around waiting to be saved either. We're seeing a really fascinating grassroots movement popping up in places like Montague, Massachusetts. They are establishing what's called a community electricity supply group. You can basically think of this as a bulk buying club, but for an entire town. This is a massive localization trend where everyday people are stepping up and taking control of their own power supply. On the ground, Montague's plan is beautifully simple, but highly effective. Let's walk through it. Step 1, they pool the buying power of all their local residents and businesses together. Step 2, they use that combined weight to negotiate much better rates directly with suppliers. And Step 3, which is really the ultimate goal here, they shield their community from the crazy volatility of the wholesale market. If state regulators approve these types of plans, we are absolutely going to see a massive wave of towns opting out of the traditional utility chaos just to protect themselves. But what happens when the power paradox swings to the absolute worst-case scenario? That brings us to Section 3. When the grid collapses, and the warning from Libya. Recently, Libya suffered a massive, nationwide blackout. And we're not talking about a brief outage here. Power plants across the entire country went offline simultaneously, resulting in a total grid collapse. And this triggers a terrifying domino effect. When the grid dies, the water pumping stations, which of course run on electricity, immediately fail. Within hours, you don't just have darkness, you have a nationwide water crisis. Businesses are completely forced to shut down or switch to incredibly expensive diesel generators. That drains foreign reserves, pushes up inflation, and instantly feeds a rampant black market for smuggled fuel. It is just a total systemic failure. And the truly tragic reality here is that this wasn't caused by a lack of fuel or some unavoidable natural disaster. The root cause is entirely mismanagement. Notice this massive drain. Up to 45% of state resources in Libya are being lost to corruption. This was actually the second major blackout in a matter of days, and it infuriated the prime minister so much that he fired the entire board of the state power company. It becomes this vicious, self-fulfilling prophecy, right? Mismanagement drains resources, the grid fails, the economy crashes, and any remaining investor confidence just completely evaporates. So if you're trying to navigate this space, what do you actually do with all this information? Section 4, Investing in the Paradox and Where the Smart Money Flows. Investors really have distinct paths they can take here depending on their risk appetite. If you're a conservative investor, U.S. utilities are still a very solid bet on the future because they're regulated and obviously essential. But as we saw with Southern Company, you have to focus on the key metrics. You want to watch those debt-to-equity ratios and look for strong cash flow, definitely avoiding any over-leveraged companies. Now, for the aggressive investor, look directly at the supply chain in tech. The massive demand right now is for microgrids, energy storage, and those backup generators with the insane 30-month wait times. Finally, the avoid strategy. International markets like Libya are just a strict stay-away zone right now due to the incredibly high risk of expropriation, contract defaults, and severe political instability. Honestly, the crucial point here is perfectly summarized by a quote we're hearing from market analysts right now: growth with caution. The electricity market is literally showing us the future. The massive wave of money pouring in from artificial intelligence is undeniably there, acting as a huge tailwind. But we simply cannot ignore the friction. Our grid is aging, the capital costs to upgrade it are staggeringly high, and as we've seen on the global stage, the geopolitical risks of failure are very real and absolutely devastating. We've explored the massive AI supercycle that's pushing the limits of our power generation, the local communities fighting back to secure their own energy, and the stark, terrifying reality of what happens when the entire system crashes to zero. As the gap between the energy haves and have-nots widens globally, I really want to leave you with this final thought to ponder today. When the ultimate modern commodity is being pulled in so many extreme directions, how reliant are you on a fragile grid? Thanks for joining me for this explainer, and keep questioning the systems that power your world.